Hello everyone, this is Martin. We've got another video update for the coming week, February the 15th to the 19th. Now, if I sound a little muffled or whatever, and I don't sound quite correct, that's because I've got a massive cold, started late last week, and now heading into the weekend and for tomorrow. It's one of these things I will have to get over. One thing I will say though, there is one time when you should never, never, ever trade, and that is if you are sick. If you're sick, and I mean really sick, where you can hardly open your eyes and your eyes are watery and you're stuffed up and you've got headaches and whatever, whether it's the flu or the cold, that's the time you should not trade at all. And you should just turn off your computer and wait until you get much better. You have to trade with clarity, and you can only do that when you're not tired and when you're not sick. So that is the one great advice I've got for you. I actually stopped trading toward the end, last part of last week, just because of my cold. So we're going to start off with this week, and the key theme is waiting for the right buy and sell levels in this week's. This is this week's theme. So we're waiting for the right buy and sell signals. Okay. Okay, starting off with the Euro USD. Here we go. Last week, I mentioned that we were in an uptrend. Now, this red vertical line depicts the end of the previous trading week. And so the first candle after that, this white bullish candle, you can see it kind of with the long tail at the bottom there, indicates that we were going to continue in an uptrend. And that's the Sunday, Monday tradings. So last week, I mentioned that we were in an uptrend. Buy on a pullback, buy on a pullback, and continuation going to the upside. So, but what I'm going to do, a lot of people have asked me, what do I really mean by buying on a pullback? Well, you can see if you're looking at a daily chart, okay, and this is a Sunday, Monday candle here. I actually would have gotten in right above the little wick above this white bullish candle. So placing a buy stop right above there, and you would have made some really, really, really good pips. However, if you're being a little bit more conservative and you want to buy what's called buy on the pullback, then let me just switch this to a 4-hour chart. Okay, you can take a look right over here. Um, Trading for the week started right here with this vertical dotted line. You can see, and right away price from the Sunday, and these are 4-hour candles. So each candle represents 4 hours worth of trading. So first went up and then down. We had a bearish black candle and then up again, which kind of showed a reversal. It bounced above the 21 moving average. So price did not close below the 21. And see, here's the bounce, okay? And this is what you would be doing. I'm going to draw in a trend line. Okay, so you would be getting in right about there, right after this candle. You would be getting in, and you would have made some good pips. And then price went down, went all the way up, and then went down in a retracement again. These are swing patterns, as you learned in the course number one. Here's the big bounce you see with this candle with the long pin bar. That's a bullish bounce off the support area. We had a huge bullish engulfing candle. Look at that. I mean, that's classic. These two candles side by side indicate a continuation to the upside. You can also see that the 21 is above the 50. The 8 is above the 21. So getting in right there at the next candle, you would have made some pretty good pips to the upside as well if you would have targeted the next resistance zone. So here are two bounce areas that I've shown in the blue circles. Okay, and you can often what you can do, you can switch to a 4-hour chart and you would still have lots of time to look at your computer and see what you want to do next, but that would also give you confirmation, often better confirmation on the lower time frames, such as the 4-hour charts, than on the daily. With the daily, going back to the daily here, you wouldn't play a real bounce unless you were going to place a buy limit order down much lower, halfway down the like a previous candle. That's something that you can do, but in this case, I did mention what we would have done. We would have gotten in right there where the blue line is. Okay, so this week, I see the uptrend continuing. However, buy on pullbacks, and on Friday we had a huge bearish candle. It's an engulfing candle, so price most likely is going to keep coming down a little bit further. Price may come down all the way to this area right here, and if price does, then look for again a bullish bounce to the upside. So kind of just wait for now, wait and see what's going to happen next. Okay, but eventually. I believe price is once it heads up higher again, it's going to come up to at least this zone here, just under the 114.70 area. Okay, so once price goes higher, then it'll go at least up to there. Okay, and now we're going to go to the British pound USD daily. Okay, last week I said that we were in a counter trend sideways. Here's the beginning of last week with this black bearish candle, just a small candle with a big upper wick, lower wick. Next candle bullish, white, uh, big wick upper and lower. The next, so basically you can see just going sideways, went up and then closed down again, and also whenever you see price between the 50 SMA and the 21 EMA, okay, if you see price anywhere in there, we're basically in no man's land. You kind of want to wait till price breaks in either direction. In this case, for this week, we're saying we're waiting for evidence. So I really don't want you to do anything. Wait until price comes up to here, and from this point on, okay, and once we break this previous high right there, looking at the left, then we can take a long trade to the upside, or price may come back down, break this channel pink line right here, and once price gets to here, then we can take a sell trade to the downside. But again, this week, wait for evidence. Okay, the next one we've got the Australian. Oh, I did want to show you one thing. Hold on. Okay, I did want to show you one thing. If price is going to break to the upside, then it's still going to go. My projected area would be around there, and I'll explain what I mean. See this here? We have A, B, C. So the AB, which is approximately 550 pips. And then if it's going to go to the upside, the CD will be approximately the same. So we're looking at, see, 570 pips or something like that. So the AB should equal very close to the CD, and that's called an ABC pattern, okay, to the upside. So again, just giving you a heads up as to how you can gauge the next resistance area being if price was to break up higher. If price was to break above this gray rectangle and above the 50 moving average, then price most likely will go all the way up to this zone here, the 149.50 area. Okay, so now we're going to continue with the Australian USD. And same thing here. Last week, wait for, we basically said we were in a sideways trading zone. Just wait for further evidence. Same as this week. We're just waiting for evidence because price is caught still between the 21 and the 50 moving average. Price is not going anywhere. Just take a look at the long tails to the downside, tails to the upside. So basically, price there's a big battle going on. Who's going to win? Don't know just yet, but this is why you have to wait for the evidence, as you can see right there. Once price closes above this area here, you can take a trade to the upside. Price has to come all the way down to here. down to this area for you to take a trade to the downside. So again, just wait and see. Now we come to the let's take a look. The New Zealand USD daily. Okay, starting here with this first candle. This is the first trading day of last week, well, the Sunday, Monday trading day. And this came after a huge bearish black candle. Now, does that necessarily mean that price is going to keep going down? Not really. However, we are in no man's land. Again, prices right now, right over here, between the 50 and the 21, okay? And so for last week, I said we're in a sideways pattern. Look for bullish evidence. And we actually had it with this candle right there. You see this one big kind of almost an engulfing candle, which closed above the 50. Taking a trade at the open of the next one would have gained you about 35, 40 pips, okay, before closing on the Friday with another huge bearish candle. So what does this pattern mean? Price goes up, comes up to resistance with the trend line as well as the gray rectangle, and price slams right back down. This indicates that possibly there's more bearish evidence to the downside. However, again, we just want to wait for further evidence. Either price would have to come down below here before we can take a trade to the downside, or price would have to close above this area right there for us to take a trade to the upside. So again, this week, just wait for further evidence. Okay, now we get to the US CAD, and last week I said that we're in a counter trend. Okay, so by that, again, let me just zoom out again. So you can see we're in a total uptrend. We're going, the swing lows are higher than the previous swing lows. Here's a swing low, which is higher than the previous swing low. Excuse me. And all of a sudden, once we get up to here, almost in an oversold territory, price slams right down, comes right down, and this is called a counter trend. So there were opportunities to the downside here, but let me just zoom back in. And so prices now come to this area right here. It has bounced off this. Support area of the gray rectangle, okay? And last week I basically said just wait. We're in a counter trend, but wait. And as a matter of fact, price ended up going up, down, up, up, down. So in a sideways pattern. This week, the key is waiting for the right level. We're waiting for the for price to tell us where to go next, and price would have to come all the way up to here for us to take a trade to the upside. Price would have to break this level right here and close down here for us to take a trade to the downside where the 100 simple moving average is waiting, and we've got this longer term trend line you can see right there. So I believe the US CAD is actually going to be heading down. um, uh, you know I believe that, but again, it's just a wait and see situation. Okay, so next one, we've got the USD Swiss franc, and this is an interesting one where price went down by quite a bit. And last week I said we're in a downtrend caution. And actually, price went right through as much as possible, all the way down to the 200. This is the 200 SMA, where you can see prices now kind of stalled and possibly making reversal to the upside. Now, I did give you a good heads up here. I said sell stop below the 98.74. That is this line right here. If you would have taken or placed a sell stop right at that level or just below that level, you would have made at least to the next support area right here, which would have been good for 44, 45 pips. However, if you would have let your trade run, perhaps closing half your position and letting the other half run, you would have made another 160 to 200 I'm sorry, another 150 to 160 pips to the downside. So that would have been an excellent trade for you. Now for this week, we're still in a downtrend. However, caution because remember, price now reversing off to 200 simple moving average. Okay, what we want to do is wait for price to come all the way back up and sell on a pullback. Now, let me see if I can. Okay, so price, we want to see if price can come back. And where again, price may pull back all the way up to this area or just below that area and then come back down again. So again, just look for evidence, sell on a pullback. Okay, there's a good reason to take a counter trend trade as well, just above the high of that wick if you wanted to, and limit your loss with stop loss just below the 200 there. MACD is, again, it should be below zero. We should say below zero, not above zero, okay? And now we get to the USJP. Okay, this was a huge winner for those traders who did also take a sell stop at my what I mentioned in my video last week. I said take a sell stop below the 115.70 75, which is this line right here. If you would have done that, you would have made quite a bit of pips, at least 300 pips or more, depending on where you would have taken your profits. Um, Last week I said we were in a sideways. That really did not. It actually on the Sunday Monday open, you can see this big black bearish candle right there. It was basically a confident bearish candle, uh, and letting us know that the sellers are in control and that the price was going to continue beyond the 2015 low right here. So price did break that, and price was going to continue going further south. Okay, so that's why I did mention and had that area for you. If you would have taken advantage of that, you would have been in profit by quite a bit. So this week, we're still in a downtrend. However, we want to sell on a pullback. Again, that means waiting for price to come back to at least this area right here. Okay, and well, that area being at least 114.26. However, price may come back even higher up to around there. And then again, waiting for a selling evidence to the downside before taking another sell trade. Now, if price continues going down, um, the next level to the next support area would be about the 109.70 right here. Okay, so price still has a long way to go. So if we can catch price coming up here to an area to the right level, again, this week's theme is waiting for price to come to our levels, then we would have a great opportunity to perhaps make at least another 500 pips on this trade if we let it run. Okay, so at least once price goes up here, at least it's going to come back down here. But once it comes back down here, most likely it's going to go down much further. Okay, so that's what I've got for you for the major currency pairs. Now we're in some of the cross pairs again. Let's take a look at the CAD JP, and this was an interesting pair, very simple to follow. Last week I said we're in a downtrend. Okay, we're in a downtrend, which we were. Sell on a pullback. Okay, and again, let's take a look here. On the previous week on the Friday, this is the candle. It closed right here. You can see that it closed below the 8 and the 21, and price is also below the 50. So all eyes are towards the sellers who basically with this candle at the close of the previous week are in control. You could have gotten in right away at the open of the next candle on the Sunday money trading, and look at that, you would have made some pretty good pips, more than pretty good pips. Uh, but the other thing is, take a look. When I talk about taking a sell trade on a pullback, which I did mention last week. If you look at the previous candle, here's the range from the low to the high. Halfway is where I've indicated with this blue horizontal line, taking just placing a sell limit order there, okay, and then um, and that's what I mean by taking a sell limit order halfway up the previous bearish candle, as long as the halfway point is right near or just below the 8 and 21, then that would be a good opportunity to short the position to the downside. Okay, so that would have worked out good. Now, the conservatively, your stop loss should have been just above the wick of that candle, which is right about there, and that would have been that's where the stop loss would have been. Okay, so this week, wait for a counter trend trade, buy on pullback. So what that means, counter trend means it's most likely going to go a little bit higher, but wait for price to come back down again. So you could possibly place a buy limit order halfway down the range of this candle right here, this white candle. Let me just draw a line. Okay, so somewhere around there. This is kind of a bullish reversal pattern right here. Been a long pin bar with a white engulfing candle. So most likely price is going to go higher. It may go higher all the way up to here, even though the MACD is below zero. Okay, but that's how you would protect yourself. So if you're taking a buy limit order right there, your stop loss will be just below the wick of this candle, eliminating most of your risk. Okay, and now we're going to come to the big winner of last week, British Pound JPY. Okay, now for anyone that's ever traded the British pound, Japanese yen, you know that this currency pair moves quite a bit. I mean, it's not it's not not that it's that volatile, but the moves are massive moves, and each candle is a little bit greater than a lot of the other currency pairs. So look at this one. This one is 230 pips. Okay, so each of these candles is like 200 pips or more. And last week I said that we were in a downtrend. Again, this red line designates the end of the previous trading week. The first black candle right here, black bearish candle, is the Monday trade. And just based on this previous candle, on the Friday, it closed here below the 8, below the 21, below the 50. All the moving averages are pointing down, and the space between the 8 and the 21 is getting wider. Let me just zoom that. Okay, let's take a look here. Okay, do you see the space here getting wider, wider, wider? Okay, so based on right here, if you would have placed a sell limit order, and why not? I mean, you've got to go sometimes with the odds. The odds are that price is heading down, going down further, prices below the moving averages. Um, we had a bounce off with this engulfing candle off the resistance here. Price broke the bear flag with these blue lines right here. And so if you see this on the Friday closed here, then picking a point about halfway of the that candle's range, you would have gotten in right there, which would have gone against you by a little bit, but then it slammed right back down on that very first Monday trading. You would have already have made 291 pips. That's pretty amazing, guys. Your stop loss would have been just above the 21 moving average here. Or okay, that's what I would have done. And again, let's just zoom out a bit. If you would have held on to that trade, I mean, this trade could have made some pretty interesting profits for you, because it either went either you would have made 300, 500, 700 pips, and actually there were 700 pips waiting for you to be taken off the tree. So this week downtrend, we're still in a downtrend. However, wait for a pullback, and in this case, I'm saying that pullback means waiting for price to come way back up here. So not waiting for the previous candle, pulling back to there, because we've already had a bullish. On Friday, we ended up with a bullish white candle. So in this case, we want to make sure price comes back up to the 8 moving average, or somewhere between the 8 and the 21. Let's go down to the 4 hour. Okay, and you can see that's what we're looking for. We're looking for price now. Right away, you can see we got to wait for the Sunday open, but price has to, like I said, um, be either bounce off the 21 and come back down, and you've got to see a very good strong candle to the downside before you can be confident to take a trade to the downside. So in this case, I'm going to suggest just wait and see what happens next. Okay, the MACD is below the zero here. Now next we've got the Australian JP. This one is almost like a reversal pattern. We have a double well, almost a double bottom, but price went down really far, kicked all the way back up, and then we had a white bullish engulfing candle. These two candles together show me and tell me that there's a reversal. And I believe that this might be a good counter trend trade. So if you want to take a counter trend buy order, place a buy order just above the wick of this white candle, maybe 10, 15 pips above that, and then just watch it go up and take your profits where you feel comfortable, right? Or if you want to take a sell trade to the downside, then you would either wait for price to come back higher with a sell limit order around here somewhere. But it almost looks like this is going to be coming back up. So this particular pair seems to be reversing. Okay, last week I said sell on a pullback. Same thing right here. Take a look. Um, this was the Sunday, Monday trading day. Price opened up right here, then went all the way up, and then closed down. So again, if you would have placed a sell limit order right here at the blue line, somewhere around there, you would have already, after the Sunday Monday trading session, would have been in good profits. And the only reason, and the reason you can take a sell limit order halfway up the previous candle is because we already are we can anticipate price on the daily time frame coming up and touching the 8 and the 21 moving averages. Okay, again, note that price is below the 8, below the 21, and below the 50. All so at this point of last week, at the beginning of trading week last week, we could have said, yeah, most likely sellers are in control and will be taking price down further to at least the lower swing low on the left-hand side. So as price was coming down lower, we knew that price was going to at least come down to this area right here, giving you a good take profit target. Okay, this week, again, sell on a pullback, so waiting for price to come back up all the way on the daily chart, or taking counter trend just above the high of this wick right here. Okay, and do we have any more? The New Zealand JPY is our last um, uh, currency pair that we're going to quickly look at. Same thing. This is the exact same setup as the Audi JP. Okay. The difference is with the Audi JP, we had a bullish candle on the Friday, which indicates that the reversal pattern is going to continue going higher. With the New Zealand JP, though, you can see we had a bearish candle on the Friday, and that negates this long pin bar. I mean, if this was a bullish white candle, then I would have said, the probably the buyers are going to take the price a little bit higher. But from a technical standpoint of view, this kind of worries me or bothers me in the sense that it's still it closed in a negative position. So in this case, I would kind of just wait and see. You could take us either. I would just wait and see what happens with the Sunday Monday close. Okay, again. We're in a downtrend, sell on a pullback, which means waiting for price to come up much higher on the daily chart. Okay, you can confirm on the 4-hour charts, but taking a look at the daily charts, making sure price comes up to at least here before before considering taking a sell trade to the downside. Now, the 2015 low is right here at the blue line. So if price does continue going down lower, it most likely will at least retest the 72.73, this area right here. Okay, so that's what I've got for all of you good folks for this week. Um, the theme is, waiting for price to get to the right levels. In most cases, price is now reversing, giving us counter trend opportunities. But at some point, some of the major currency pairs, the trends may continue or may be reversing. And the question here is, how is the U.S. dollar holding up? And there seems to be almost um, two stories with the dollar currency. It seems to be strong at times, seems to be weak at times. One thing we can be certain for sure that the Japanese yen was the strongest currency last week. And the question is, will it continue for this coming week, or are we about to have some reversals, especially on the Japanese crosses? Best time to play the Japanese crosses are in the Asian session from 7 to 9 p.m. in the evening. Okay, so that's it for this week. Happy trading, everyone. Send me your emails. Be more than happy to answer any of your questions. Take care, and we'll see you again soon. Bye for now.